Hi traders, welcome to Profiling to Profit. Today is Sunday, December 11th, 2016. I hope everybody is having a nice weekend. First, before we get started, let me just say I apologize. I'm just trying to get over a cold, and so if I'm hacking or sounding a little congested, my apologies up front. But hey, listen, it was a crazy week again in the markets. When I say crazy, I don't mean volatility-wise. It's we had one week down in the Nasdaq, and then of course this week it was right back up again. We saw a few markets hit new highs. So are they pumping things into the FOMC meeting this week? Not real sure, but let's take a look at what's going on in the news this week because there is a few things that are important. First and foremost, in the U.S., we have interest rate decision during the announcement, which will be on Wednesday, the 14th, the FOMC. That meeting starts on Tuesday and then rolls into Wednesday's decision at 2 p.m. Eastern Standard Time. And then, of course, just also remember we rolled and contracts in the indices. And of course, it's quadruple witching day, or on Friday, the 16th. So just be aware of that. A lot of weird things happen on that day. So just if you don't have to trade on Friday, the quad day, it's probably a good day not to. Also, something that happened, we saw some news this weekend about OPEC and some more agreements and from non-OPEC countries. We're not sure how that's going to have an effect on oil. It will have an effect on oil. So we're watching that opening price in the Globex session to see what that looks like. And we'll take a look at the chart here in just a minute on that as well. All right, around the world, news-wise, we don't have anything until Wednesday. Again, that Wednesday news on the 14th is out of the U.S. The most important portion of it is the FOMC, which is the Fed's interest rate decision. And then we have a couple things in other countries. We have this Swiss National Bank is going to release the interest rate decision on Thursday. And then on that same day, the Bank of England is going to release their interest rate decision. So if you're trading currencies around the world, just be aware of it. Also, looks like CPI is coming out of the European Union as well. So anyway, guys, a few things in the news. Just again, the main things in my opinion are going to be oil, how it reacts to the news over the weekend of FOMC on Wednesday, and then of course quadruple witching day on Friday. Let's get to the charts here. All right, as I said, last week in the NASDAQ, we had a 178 point down week. Okay, we thought, a lot of people are saying, well, my gosh, we had double distribution here. Again, these are 1 week profiles, 2-hour candles, and this is a longer composite of the profile. Can run up, it's usually about 2 months in here. So we thought double distribution. If we can hang from this area, we should maybe see some new lows. We did not. We turned right back around, went up about 154 points last week. So now we are only 16 points away from this high at 49.11. Now, we don't have any zones other than the one way down here we've been waiting for. That may not get hit for a little while, it looks like. But let's go over to the ES. So there's nothing going on in the NASDAQ for us at this time. It's a sucker's game to maybe start buying up here thinking that we're going to take out that high. Most likely we will, but if there's a game involved here, and of course we're rolling inside into the number on Wednesday, then I would say be careful on that. We don't have a zone and we won't be participating in the NASDAQ. Same thing on the ES, but the ES, look at this. The previous week we had just a balanced week. It broke out from the balance. We had double distribution up, made new highs, closed on the all-time high at 22.55. And of course we do have the zone down here. 2164 down to that 2150 area. We will watch that after the news. Prior to the news, I don't anticipate that going down to this zone. It would be very shocking. It would probably take an event in the world to make that price go down there before that news event. So if price gets down there, we will watch for a trigger. And again, listen, I don't know what the Fed is going to do. Everybody's expecting interest rates to be raised. Listen, whatever the news is, we think it's baked in at this point. But we'll have to see. We just don't know. We've seen all kinds of crazy surprises from them. The Russell right now, same thing. Almost looks just like the ES. Again, balanced week in the previous weeks, and then of course last week we had this nice move up. Another just just straight up algo type of driven. We didn't quite close on the highs, but we're only a few ticks away from them. The zone down here that we'll watch after the announcement is at 1280 down in that 1260 zone. Pretty solid zone in here. We would like to see it come down here. I'm not sure if everything is positive to the markets, this thing could pop pretty quickly and keep running for a little while. All right, crude oil. Crude oil, we said, hey, listen, there's news out over the weekend. There's a lot of different ways to interpret the news. I will tell you, I would be shocked if they didn't. If crude oil didn't have a reaction to that in the Globex session. I'm expecting a gap one way or the other. Of course, we're not going to guess at this thing. If you are long or short right now, I would just advise to manage that position as soon as you get into the Globex session, especially if it's going way against you. Do what you need to do. We're still watching the zone down here from 48.80 down in the 48 area. We're going to watch it carefully. If it gaps into the zone, our rules for gapping into the zone are we wait to see if we get a push out and then a retest, then we can get long in the deal. If it gaps below it, the zone is off for us, no doubt. And who knows? The news that came out was a little bullish. We're expecting a gap up rather than a gap down, so we may not even get close to the zone here. But watch the zone. There are a lot of rumors, a lot of news. This OPEC thing is not done yet. We believe that crude oil wants to visit that $60 range. We think it could get up there, and if the market looks at this news that came out over the weekend as positive, we could be a little closer to that news. Okay, let's move on to gold. I can get my fingers working right. All right, gold here. Gold is, again, consolidating a little bit at the lows here. Nice balanced week. We have this zone right down here that we've been watching anywhere. That's 154 down to 140 or 1142. We're watching it closely. We like this zone still. This is probably the better opportunity of the week coming up, as we feel if we can get triggered into this before the FOMC meeting, so before the close of Tuesday, if we can get triggered into this trade, we'll go ahead and take it. If it's not triggered in by close of Tuesday, the market close, of course, then this zone is off, because the interest rate decision will have an effect on gold, no doubt about it. We're not going to step in front of that freight train. We could make a lot of money, and it could be a quick money, but at the same time, you can get wiped out pretty quickly too. So right now, Goldie looks pretty good up until close of Tuesday. Actually, if you want to be more conservative, noon on Tuesday, if nothing's happened, then probably just want to take it off and just sit aside and wait for the news to come out. So Goldie's the best one of the week that we see. All right, the euro. Euro has been a little bit crazy. We had this nice move early in the week out of the balance. It blew through our zone, so the zone was off. We had this wonderful zone. We thought a little pullback and then a sell-off. Of course, Draghi started opening his mouth, and when that happened, it was like lights out at that point in time. And they took the lows out, so they engulfed really 2 straight weeks, actually 3 straight weeks here. That's pretty bearish at this point. As we said before, if things do get bearish, we were looking for this zone to test down here at this 104.60 area. That 104.60 area, if we pull out, is the all-time low. 104.63, excuse me. So that's most likely the magnet down there. If market can still continue to work down there, we believe it will. the euro will react to, of course, the FOMC here. So we just got to sort of keep an eye on it. If it does sell off, just like gold, if gold sells off, most likely the euro will follow it. That usually means that the indices here in the States are going to be popping. If they pop those things here, then most likely this euro will get down into that low and test it and probably take it out at that time. However, we're not going to establish a position down here. We're taking this zone off. This zone's dead. Right now, we just got to sit on the sidelines and see how this works out this week, and then we can develop a new risk zone off that. So there's really nothing going on in the euro. All right, let's move over to the bonds. Bonds, again, consolidating down here, and then went ahead later in the week to finish and make new lows and actually close pretty close to those lows. So there's still no zone for us. We've looked back and trying to find some areas that it could be a possible buy. We did find something on the notes that look a lot better from us, but right now we're just going to sit on the sidelines with bonds. We like the notes better. Let's go over and take the notes. And people always ask us, why there's not much difference as far as patterns are concerned and how it's set up. Yeah, I get that, but notes right now are a no-brainer. We have this zone that's pretty well defined down here. 123.25 into that 122.95 area. We like this quite a bit, and we want to make sure that if we get in this zone, we get an opportunity. Again, this is going to be like most all the other trades this week, guys, and it's this. If we can't get triggered into this about midday or Tuesday or by close on Tuesday, you just want to sit on the sidelines. Do not jump in front of this freight train. We just have no idea what's going on, what's going to happen with the Fed, and what are they going to say, and what announcement they're going to make. So it's really at that point in time a coin flip, and all risk is virtually, or all risk parameters are gone at that point in time, because one thing said by them or one decision and price can blow through this stuff pretty quickly. So this zone here is valid until mid Tuesday or close of Tuesday, depending on your risk. And again, if we don't get anything, just sit on the sidelines for now. So, but at this point, notes are the ones over bonds for us. Okay, let's go take a look at the grains real quick. Now, we had a USDA crop report out on Friday, and it literally, it really sent corn sailing. The report shows more production, which places corn on really the precipice of records around the world. It really does. In the United States, not so much. The report was pretty pretty bland in the United States. And I say bland not in a bad way, but I mean just it was okay. There's no changes in the U.S. We're still running bumper crops right now in the U.S., but actually, around the world, I thought the report was quite bearish, but we saw this big move upwards. And just like any other market, price is always going to be auctioning, looking for new opportunities. And it did. It auctioned up on Friday. Again, a little bit surprising. There was nothing in the reports that said, yeah, this thing should rally. But it is what it is. We did, if you look at the profile in 1 week, it is a balanced week at this point. So really, I can't say there's any blown out moves here, anything that needs to be cleaned up on the profile, because there's not. But as far as right now, we're staying below. We did test this 364 area, which is sort of the secondary line in the sand. And of course, we do have this area down here, the 345, which we've talked about for ages. Now, we did have a small risk zone here. This is a little bit higher risk zone, if you will. If price can stay above this 349 down into the 345 area, then we think price can go ahead and take out the 344 area, or excuse me, 364 area, and then continue to go up a little bit higher before it meets any type of resistance. Now, again, this is totally against what the supply and demand is dictating right now in the marketplace. However, again, at some point, people like to take profits regardless of what supply and demand are. Not everybody's going to jump on the ship and keep going down. let's pull this thing out. We've seen a very nice move in corn. Um, let's see here. Back in June, we had a high up in corn at about $4.40 down. Then we sold off for the next 4 or 5 months into that 3 to 14 level. Prior to that, we had a July in 2015. You notice it was about the same time frame. We had a high and we rolled it down below. And then, of course, sort of stumbled around before recovering back up. So, we've had some nice moves down, and with good reason, ample supply in the marketplace. Supply demand price wise, but right now it's not like that, and or say it's just not like that. It is. The supply and demand still there. The supply is ample, but what we're seeing right now is that maybe some people are wanting to take profits. So based on our profile, which obviously we use more than anything, we want to define this risk down here, and we think that from the 349 down to the 345 area we have a good opportunity. It is going to be a tight one, so if you get into this one, I would keep the stops fairly tight so they don't roll this back into the zone here. Again, if you do get in, the first target we feel is the 364 area, and then we'll see if they blow this out and keep going upwards. And I'm sorry about the rambling on the corn there, but corn's a little bit odd, and it's a tough trade right now. It's not a direct, it's not a clear direction. However, we think that gives you the best opportunity. And let's face it, corn is not going to be influenced by FOMC, and so there's a good opportunity for us to focus on that while FOMC is going on in the background. All right, over to the soybeans. Now, again, let's go back to the report. Soybeans reported a slight increase worldwide, and it had a small bump on Friday. It wasn't quite as large as the corn bump. Let's go ahead and pull this out or push this down to a 15-minute. You can see after the announcement we had a nice move up in corn or soybeans, but it wasn't quite the size of the move that we saw in corn as far as how far the product went, or price went. Now they've tried to poke at this level. We outlined this level a while ago at 1056 there. It's tried to poke that level twice and it's been rejected. If this thing goes up and pokes again, most likely it'll take it out. And we'll just see if there's any stops up here that they're going to run, if they're going to clean anybody's noses off, and then continue to go on up there. And then of course anybody who was short down in this area is going to probably have to cover it. So we're going to see a little bit of a punch up in there. So we're still liking this zone down here from that 1005 area, that 1005 area down to 992. Just like corn, if we can get a little move down, get everybody established in a position, we can go ahead and take this 1055 area, 1056 area out. That would be a nice trade there as well. Again, soybeans, all the grains are not going to be affected by the FOMC meeting, so they will trade independently of that, so you don't have to really be aware of it. Other than that, guys, I think that's all I've got. Again, just watch the open. We got to watch and see how OPEC or how oil is going to react to the news from OPEC and the non-OPEC countries. And then, of course, all eyes will be on FOMC meeting on Wednesday, and then the quadruple witching day is on Friday. I'm sorry I'm having troubles talk because my head's all stuffed up, but I appreciate your guys' patience. I hope you guys have a great week, and again, if you're struggling, this is a great time of the week to come on over to the Market Profile Trading Academy. Take a look at some of our education. We have all these great videos. Here's a great one we just had put up last week, dealing with days that don't go your way. Happens to all of us. Nobody's exempt. Go over to the free resources tab over here. Of course, be sure to register for our 7 Secrets to Trading Success. It's a great ebook. It's free. And then go down and take a look at all the free resources. This is a great week to do it because sometimes, guys, if cash is a position, these markets are getting difficult to navigate because everybody's sort of playing. We have a new president. We have a lot of things, like OPEC. We have all kinds of things going there. We have the FOMC issues. We have debt issues. We have a lot of things going on. We're sitting at at all-time highs in most of the markets right now, and people are trying to figure out what's going to be next. When that happens and you're not sure, then you probably need to maybe sit on the sidelines, get into cash, and maybe use that time to work on yourself rather than trying to push something that's not there. That's when people start to lose money. So take this time, guys. take a look at your trade plan. It is at the end of the year. Good time to take a look at that plan, get ready for next year. And again, if you need to brushing up on some stuff, get on over to the website, marketprofiletradingacademy.com. Take a look at all of our resources. And lastly, before I let you go, if you need to contact us, yes, we do answer the phone, 541-728-3217, or just drop us an email and we'll go from there. Otherwise, guys, great trading this week, and we'll talk to you next week. Take care.